Well, no. I think that's right. I mean, I don't know if it's 2 points for the recession camp. I think it's certainly 2 points for those of us who do think that the Fed hiking cycle is over. Now, again, am I dug in, or are we dug in here that the Fed couldn't go again in May? I mean, the bottom line is it's kind of like we felt last month. You're really essentially at the peak. I think, as we talked about the numbers over the last couple of days, the tone of the FOMC minutes yesterday, all of that has us feeling a little more confident that you won't see another move in May.
It's not the consensus, though. You okay going against that? You think they're going to come around in the next few weeks?
Well, I mean, again, I just think it's, the minutes yesterday did suggest several would have been in favor of pausing. And so I think since then, the data haven't really been compelling. And if anything, should give them more confidence that the things are moving in the direction that they anticipate. But I think it's also just about going forward, the expectations about where we're headed. I do think we're going to see weaker consumer spending data with retail sales tomorrow. There's signs of a bit more stress on the consumer side. I think we're all concerned about a credit crunch biting this year. I mean, if you think all of that's coming at you, you've already done so much. The inflation numbers are moving in the right direction. Really, what does another 25 do, quite honestly? And from that standpoint, it just seems like the path of perhaps least risk is to pause here and to get more information.
Steve, you coined the term pause posse, and I'm curious what you make of the and I don't know whether that's going to be this meeting or the next one, but you see it forming. You see it forming.
You put me in a tough place here, Kelly, between the consensus and the brilliant Michelle Girard. And I'm going to side with the consensus right now, only because the Fed speak I've heard suggests that some people who are not necessarily dyed-in-the-wool hawks, to mix a metaphor there, still seem to be talking about more work to do. It was a phrase that Mary Daly used. It sounded to me like John Williams. It sounded to me like Tom Barkin are all folks who thinks that the Fed ought to go further and do more. And there's the consensus, which is kind of Michelle's in that 30% camp, which, I have deep respect for. But here's the thing. I'm going to take a bit of a pass on saying which way and how, because to me, it's going to be determined by what we know about the banking system. And so we have the H41 coming out today, which I've called the Fed's buffet or salad buffet, which will tell us how much money banks are still taking down or borrowing at the window and the various windows that are available, give us a sense of stress in the banking system. And then we'll watch the bank earnings to see what extent there's still remaining stress in the banking system. Remember, the staff yesterday, in their decision to say that recession or a mild recession is now the baseline, it was predicated on banking credit tightening in the system. If that seems to be the case, then maybe guys like Fed Chair Powell might side with the Girard camp and join the pause posse, so to speak. But I'm just not hearing it just yet.
How much is the retail sales going to matter, Steve? Let me just point out what Michelle cited a moment ago. Bank of America Institute's publicly released consumer spending data uses consumer bank information that they have, obviously. It echoes this thing we heard from Barkin about slowing consumer spending in March, lower card spending, minus 1.5% month on month. They cite slowing wages, lower tax refunds, and expiration of those SNAP benefits.
I'll respond real quickly and give Michelle the floor. But all of this, Kelly, as I've said before, has to run through the inflation channel. They don't care if consumer spending is lower right now, as long as lower consumer spending leads to less inflation. And they're not going to be so concerned that there's less bank lending unless it ends up lowering inflation. That's what's motivating the Fed right now. So, and by the way, I think there was a line in the minutes that said just that. So, yes, we'll watch those retail sales tomorrow very carefully, but watch the extent to which lower consumer spending ends up running through the inflation channel.
Michelle, what would you add to that?
But they do, the Fed does still think that demand is a leading indicator of inflation. And so they will look to getting ahead of anticipating what's coming in with respect to inflation by judging to the extent that demand is weakening. But Steve, I think you made a great point with respect to the bank earnings as well. I think all of us are looking very much to the color that we'll hear alongside those earnings releases, the results. obviously, what we're seeing in terms of deposit outflows, but even more importantly, what they're seeing about the impact on economic activity, on their own lending activity. I think that will add a lot of more recent, if you were up-to-date information that all of us, that it may fine-tune all of our expectations about where we are in this economic cycle.